Hello, my name is Steve Bigelow with the Candlestick Forum. Using candlestick signals can provide a very accurate trend analysis process. That's basically boils down to that if we know what the nature of each signal is, again, the Japanese rice traders have told us that the Doji and a Harami tells you there's a change of investor sentiment coming. And as we saw, on Friday when it closed or traded lower, remember the Doji rule, probabilities are pretty strong that we're heading lower. This is why I constantly use observe the obvious. It becomes much more obvious when you can combine where you are in a trend, what everybody else is watching, and what type of signals we see at that level. So today, obviously, with it trading lower, below the T line, this now becomes the next target everybody's watching. So remember, the T line has an extremely high probability expected result. Overbought condition, the NASDAQ doing a Doji Harami, trades lower, Doji, gap down. When it gapped down and closed below the T line on Friday, again, the probabilities went to 90% or greater that investor sentiment had changed or heading down. So when you can have that information as part of your investment arsenal, that's where you use 2+2 analysis. If the market's turning over, you see something like Amazon doing a Doji right smack dab at the 200 and starts trading lower, and the market's trading lower, you add all that together, especially again, trading below the T line, you're probably heading in a downtrend. Roku, same thing. These are all recommendations we've made because of the signals, the Doji, failure at the 50, then a gap down, close below the T line, followed by a Doji sandwich, and we know what the results of a Doji sandwich are, more downside. So this downtrend is getting greatly confirmed, or very positively confirmed, that the bears are in control. This is what basically puts you in the right direction at the right time. So when you use the T-line rule, you're in the overbought area. What's the basic rule? You stay long until you see a sell signal and a close below the T-line. This is what keeps your emotions out of your trading. As long as you're above the T-line, you're in an uptrend until you see a sell signal and a close back below the T-line. So the probabilities are extremely strong that when you see sell signals or indecision at a level everybody else is watching and a sell signal, it's probably heading toward the target, putting you in situations where, again, the probabilities are extremely strong that the signals are telling you exactly what's happening at levels everybody else is watching. The strength of candlestick signals, like your best friend signal, not only tells you the direction of your next price move, but the magnitude is also going to be extremely strong. So that's illustrated today when we recommended AXSM. Look at your best friend gap up on Friday, and look what it did today when the market was trading off 600 points. So right now, as long as we're trading below the T-line, assume the downtrend is in progress. This is what puts you in situations, or at least in scanning situations, you're trying to find the strongest bearish signals. So join us. We're still giving a 2-week free trial where you can come in, test out the chat room for 2 weeks. You're going to see lots of good trade setups, lots of good evaluations, and we use the horseradish marketing. We don't force anybody to do anything. The horseradish marketing is, if you can see that it's good quality stuff, we don't need to push anybody into doing it. It's just common sense, high probability situations. That'll be it. We'll see you in the chat rooms.